Hey, what's up, guys? Wanted to make a video today. I've been waiting to make a video when I'm gonna be able to get in the market, make some moves, but sort of have been sidelined a bit. And but recently, I've been just paying attention a little bit because of what's been going on since the Silicon Valley Bank went bust, and um, I got to realize like how crazy this actually is, right? It took me a while. I'm not, you probably know, I'm not like a finance guy, more like a shitcoin trader, right? So it took me some time to realize what's really going on, and and honestly, the last 2 days it's just been surreal. Me even waking up and thinking about this shit, how deep this rabbit hole goes. So, first of all, before I go, I have some tabs open that I want to touch on, but I will take a few minutes and try my best to kind of give my take as I see it, right? So, to summarize it, all right, since 2020 started massive money printing, right? That's what fueled the bull run, what we all experienced, lost our absolute minds. All great, all good, until the Fed started to raise the rates again. End of 2021. And as we faced, got absolutely wrecked in 2022. But looks like it's not just us. Yes, we shitcoin gamblers, right? not not here to make any excuses. Took massive risks, lost basically all my money, and rightfully so, I guess. But there looks like there was some people also getting in trouble who should not be getting in trouble. And we're not talking about big companies that have billions. We know those get in trouble. We're not talking about even multi-billion-dollar companies that got wrecked, and that was already surprising. Remember before FTX went, how you might have thought like, there's no fucking way. There's no fucking way. There's like, the guy's like with the, he's with Congress and shit. But no, even that went. However, it looks like it doesn't end there. Now is going to banks. And this is the worst of all. The way they're going, the type of person, the kind of things that they have been keeping from the public is, I mean, it's surreal. It feels like a nightmare that came true. So to explain it, basically, as I was saying, as I understand it, is basically like, okay, how did the banks go? Why are the banks in trouble? Well, normally they get very low interest rates, right? They get to borrow money from the Treasury, the Fed directly, whatever. And they also get deposits, right? We are their customers. We take our money, whatever we make from our income or whatever, and we put it into the bank. And they can take that money and they can lend it to others, right? Just like if you were to try to go get a loan from the bank, they give it to you at like 8%, 12%, right? And if you keep money on the bank, they give you like 0.5% or whatever, right? All good. That's what banks do. That's all fine. Cool. However, since they started to increase the rates, and fastest rate increase ever in history, some shit started to break, right? The yield curve became negative. So basically, what the interest rate they can borrow from the Treasury and stuff is not as great anymore. And plus, people don't have a reason to keep their money in the banks per se. I guess many people, most people don't know they could. But when you could go to the Treasury directly and get 5%, why the hell would you be keeping your money in the bank getting 0.5%? You could get 10x the return with a very safe, much safer than a bank, directly in the US Treasury, right? With that happening, banks started to lose money, right? The yield curve is inverted. So every day that goes by, they're basically having to borrow money at a higher rate than they can lend it out for. And not to mention, not a lot of people, like a lot of big, I guess, smart investors are not going to keep their money in the bank anyways, because they can just have the directly go to the Treasury notes and T-bills and all that shit. This is where the problems start to happen, right? Normally, when a lot of these banks got so much, okay, so that's one point. That's one point. The second thing to make it even worse is what a lot of these banks did. Since they got so much deposits, right? Because there's so much money printing, everybody got stimulus, money came from the air. Since there's so much deposits they started to invest this money more efficiently, right? That's what people do. This is like the culprit of all evil, looks like. How do I invest my money more efficiently? This excess capital I have that doesn't really belong to me. FTX, Luna, all these guys follow this. But hey, we thought it's supposed to be the game of the crypto scammers, right, guys? Like we're all the bad guys. Why are the banks doing this? Isn't this like the Fed? Like, anyways, so they did similar stuff. They started investing, not crazy risky stuff, but still risky enough for them that they can't take it out soon, right? Normally, if they were underwater, apparently what they do is they just hold it. Because if they buy a, let's say, 10-year treasury and they're underwater on it, they could just hold it until the 10-year gets full, and then they would get their money in full plus any interest they gain. But since the rate hike was so aggressive, they can't wait that long. They are already underwater. That's when these things start to break. With that background, let's look at, though, when this stuff gets absolutely crazy. Okay. So, I mean, there's no, let me want to take this. I don't want to pause and stuff. I was going to say there's a few things I want to point out in these articles, but I'll just try to do it my best. All right, let's see. Relationship between unrealized gains and losses, tangible equity. Okay, increasing rate environment, securities were purchased. Yeah, see, this is kind of like what I was talking about. They were purchasing securities, and due to an increasing rate environment, securities that were purchased when the market dictated lower yields have become less desirable to investors, resulting in declining valuations. Okay, accounting standards require that changes in available, I don't understand this, okay, securities, some kind of securities that gives you a return, right? Something that gives you a return accumulated over comprehensive income, thereby resulting in growing unrealized loss positions. So remember this part. This is basically kind of the technical term explaining what I just said in my own way, right? Okay, let's move on. Fed, FDIC worried about growing unrealized loss. Okay, you keep seeing this. Unrealized losses, right? Basically, that investment they made, they're underwater. It's unrealized loss. So they're lost. They don't want to capture it. They don't want to realize it, but they're just like holding their breath. Oh, is the economy going to fix? Is the Fed going to fix this? How much longer can we hold this? But then shit is starting to break. Right? They've been probably holding it for months and months and months until they can't hold it anymore. They thought they were just squeezing us out. They thought they were just killing the crypto bros here. They're not killing the crypto bros only. If we die, you guys die. So, okay, let's go more in. Where was I? Fuck. I should have I took some screenshots, but value of research. Well, I said before. No, this article is good. It's pretty easier to understand. All right, let's read it. It's interesting if we read it fast. During 2020 and 2021, SIVB was uniquely positioned to take cash deposits as a combination of PPP loans, equity investments, all kinds of cash flow, all kinds of cash shit came in, good, flooded their clients, bank accounts. It's hoorah, right? Who's not celebrating? We celebrate with crypto and stuff and shit coins. They're celebrating with all kinds of billions of dollars that comes in, and they think, easy money. What do we do with these, boss? What do we do? Where do we put all this money, right? Faced with explosive growth in deposit, SVB had to find quick and safe way to deploy this fund. Must make a return, obviously, right? Given front-end yields were only 25 BPPS, the management team naturally sought out to make a bit more by tapping into longer dated bonds, which offered yields slightly above 1%. It's like a little bit longer. We'll be fine. Fed is doing well. We're good. It's not going to come into a halt or a crash, right? That can't happen. In spring 2021, though, the disruptive bubble had popped, and a high-flying meme stocks took over from Cathie Wood, ARK Invest Funds, the market darlings, IPO secondary. They're basically, smashing, Cathie Wood, Chamath, all that kind of stuff, guys who had exploded their net worths, and many, crashed. ARK Invest went 70% down. Great, but they're not the only ones. SVB's pattern of deposit accumulation closely followed the pattern of IPO activity, which exploded in 2020 after languishing for the past decade. SVB deposits more than tripled. Okay, good. It's basically what we said so far. At this point, nothing unusual has occurred. Bank had borrowed short-term deposits and lent long. This is what banks do. There was no bad underwriting, etc. They bought high-quality liquid assets. Great. But here's where it gets crazy. By fall 2021, the pace of deposit growth slowed to a crawl, and many of money-losing VC startups began to draw down their cash and balances to fund operating losses. This part was likely predictable, but it was where the problems began. Faced with rising interest rates and likely realized losses on the securities purchased in early 2021, when things were good, management made the critical decision to designate the securities as held to maturity, where mark-to-market losses would not flow through the income statement. Unfortunately, this meant that they no longer had the choice about hedging. Okay, where was that part? This is getting more technical. Public regulators noted that the instruments moved to held to maturity, where typical mortgages, okay, they're giving some more details of the type of stuff that they held. And in my opinion, we see the evidence of deception by SVB management over the period. Note 10K SVB 20 contains a helpful table that clearly lays out held to maturity securities in the context of aggregate balance sheet. There's something that's highlighted somewhere here. Reserved, where is it? Reserved. Guys, I'm sorry, but I lost the main thing. The point is, they knew it. They knew it. The feds knew it. The banks knew it. They knew it months ago. This is not a surprise. SVB Bank going down is not a surprise. Not just the banks knew it, but the feds knew it. They got caught. There's multiple screenshots in multiple places where it was clear that these guys are insolvent. They don't have they're fucked. They're fucked, and they have been fucked, but they didn't even let the depositors know. They didn't let the people, the Silicon Valley, startups, all those small businesses, they didn't let anybody know. They just kept on letting them deposit and go about their lives until they just closed that shit down. And when it finally hit the fan, they came out roaring out, oh no, we're going to save it. We're going to step in. We're going to fund it. But that's not how this works. Right when the first one that absolutely gets destroyed, they right away, within the weekend, by Sunday night, they come to save the day. Last Sunday, exactly 7 days ago, they did that. That's not where the things end. Because if you look at, okay, I'm going to play this in a second. Where's the screenshot? June 30, 2020, the tangible equity capital ratio of CBUs fell 8% as a result of mounting unrealized losses. Look at this. June 30, 2022. June 30, 2022. 8% as a result of mounting unrealized losses on the AFC securities, which total 1.5% of average assets. At the end of the year 2021, only 4 community banks had tangible equity capital ratios below 5%. That number increased to 333 in June 30, 2022, indicating less available systemic economic shocks. 4 community banks. Hundreds of banks right now as we speak. This is the most important message of this entire video. Hundreds of banks right now are insolvent. Completely insolvent. They just haven't let the public know. This is real life. This is true. This is not a facade. These are the people. Look at this shit. In case we are not understanding the magnitude of what they did, okay, these loans were newly printed money or form of quantitative easing that they increased the Fed's balance sheet by $300 billion. In other words, just in 1 week, the Fed reversed half of all the QT that it's accomplished in the past year in one move. What do you guys think this is, a fucking game? They print the living shit out of money in 2020. Fuck shit up. Everything goes hoorah, we know. JPEGs are worth millions. We obviously are having a blast. But then they increase the rates faster than ever done in history, crashing the shit out of the markets. And now that their beloved banks, that one of them fails, now they just print $300 billion again. Guys, this is what happens. This is these are the people who are running the country. Look at this video.
Regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVBP just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to...
It's the oldest whore on earth. What the fuck? What does that mean?
protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is
And
your
we
plan?
made that determination.
Right. So
these
what is
two
your
banks.
plan to keep large depositors from moving their funds out of community banks into the big banks? We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
That she's talking as if like this is not the way to raise children. You should give them, like colored puppies, not like what the fuck? We're talking about people's entire lives here, entire economy, the entire country, basically, right? She's basically breaking down like, look, the guy's asking him like, are they gonna get the same treatment? Like you just, made them whole. These people, is everybody gonna get that? And then they're like, we only do that if there's systemic risk. Basically, they're admitting now that they can't go anywhere. They've been lying the whole fucking time. Now they can't go anywhere. They basically have to admit, like, yeah, as long as we determine that we won't get absolutely fucked, then we will do it. But then the guy's like, but we are getting fucked. So what is your point? And then she's like stuttering. The banks are insolvent right now. It's multiple places. There's no question. And I know I made videos not too long ago saying I'm going away from Bitcoin. And what is my point, right? My point that I'm leaving Bitcoin is because why? It barely goes up. Barely the volatility Bitcoin has, you can get 2x's, 3x's, but if we want those kind of gains, 10, 20x, it's not in Bitcoin. But man, I gotta say, wow, I never thought I would be roaring back to this asset with nothing else that I care about but this one thing at this time. The only thing I feel safe in is Bitcoin and cold storage. Not even freaking any exchange, nothing. Because this is insane. What is going to happen? Like, look, this place I stay in is it's like $3,000 per month. End of this year, forget about future. End of this year, this place could be 10K per month. And it's not because it's valuable, it's because the currency is going to get fucked. Absolutely fucked. So fast. It is surreal. Like, we thought we were greedy to make some money, feel accomplished, made something in our lives. These are greedy fucking bastards. To them, there is no winning until we are all dead. This is the people that are running the country. It is insane that this is the people that's running the country. It is crazy, guys. It is absolutely nuts. But wow. They don't know what the fuck they're doing. They wrecked all the crypto bros, which I fall in. They wrecked you and me, but they didn't survive because they don't know what the fuck they're doing. And we're about to get into a whole shit show because of all of this. It's about to get crazy. Forget. Let's see what even happens this week. Today's Sunday. Holy shit, I'm like holding my breath. What is tomorrow going to be? Right? What news are we going to get this week? So hold tight. Don't do any rational stuff. Some people are getting a little bit crazy and being like, okay, time to make money. Bitcoin is making a run. We're going to get shit coins. Time to make 10x's. Chill out. There is a good chance we're looking at bigger problems than just making some money right here. We're talking about a cascading contagion like Luna 3AC fiasco, but imagine it for actual fucking the real economy and real banks and like things like JP Morgan and shit. That's it. Peace.